You want big numbers? Well, how about this one? 30% of all global passenger car sales will be electric by 2030, up from less than 4% in 2020. That's according to the Wall Street Journal. This is one part of a much broader trend of clean energy adoption across the globe. And today's ETF Battles is another timely audience-requested contest. It's a triple header between CTEC, PBW, and TAN. So which clean energy ETF wins the battle? Find out right after this. Welcome to ETF Battles. I'm Ron DeLegge. It's great to see you again. Now, we just passed the halfway point of season 2, so let us know how you've been enjoying the show. Be sure to subscribe to ETF Guide TV, and if you haven't done so already, and there's a specific ETF battle that you'd like to see, hit us up in our comment section below with the ETF tickers. You can also do that on our Twitter feed at ETF Guide. Also, if you see another battle request from another viewer that you like, hit the like button on that comment, and that'll tell us which ETF battles are the most pressing. Climate change is in the news everywhere, and that's pushed the clean energy sector like wind, solar, and other alternative power sources into the spotlight. So which ETFs are best positioned to capitalize on this theme? Well, today's triple header was requested by viewers Sergio and Ibrahim. We appreciate you sending that to us. Now, it's a triple header between CTEC, PBW, and TAN. By the way, PBW was featured 7 months ago on ETF Battles. It was a head-to-head matchup with QClean, and it won. But today is a different day, and it's a different battle. So which of these 3 ETFs will prevail? Judging today's contest is Mike Akins at ETF Action and Eric Balchunas at Bloomberg. Guys, welcome back. It's great to see you.
Great to be here, Ron.
Good to be here, Ron. Thanks.
So I've got the scorekeeping chores, and the 4 battle categories are cost, exposure strategy, performance, and then we've got our mystery battle category. And for the mystery category, that's where you guys get to flash your analytical prowess by selecting one factor or maybe multiple factors you think are important to today's showdown. Our judges are going to pick their favorite ETF in each category. They can also opt for a split decision or nominate wild cards if they want to get extra fancy. And at the end of the show, we'll declare an overall battle winner. So without further ado, let's begin with cost. Eric, please get us started. Who wins the battle?
It's a tough one. CTEC is the cheapest at 50 basis points. PBW is 70 and TAN is 69. I mean, they're all, a little pricey compared to the sort of 5 basis point Vanguard ETF that a lot of people are used to. But for the shiny object lane, which all 3 are firmly in, I think they're all, in the ballpark. And when you look at the spread, CTEC, even though it's the cheapest expense ratio, doesn't trade as much as the others, so it has a slightly higher spread or wider spread. And so you're going to pay about 8 basis points to go in and out of CTEC. But assuming you're not going to trade this thing all day long, those 8 basis points may not matter. So if you added them up, you get to 58 versus, say, 71 and 72. So I guess I'd have to give the edge to CTEC, but barely.
Very good. Thank you very much, Eric. Let's shift to you, Mike. Who wins the battle in terms of cost?
Yeah, not much to add here. I think if you're going to hold these things for 10 years and you couldn't make up your mind, CTEC at 50 basis points at 19, 20 basis points cheaper than TAN and PBW will pay off over time. But in reality, these strategies are going to trade very volatile and the returns are going to be very different. And you really should be looking at other factors for today's battle. So I'll give it to CTEC, but just with that caveat.
Let's shift next to the next battle category, which is exposure strategy. Mike, you're still up. Break it down for us.
You bet. Now we're going to start getting into some of the fun stuff. First thing I would note on exposure strategy is, the extreme weighting to semiconductors within both TAN and CTEC. So, TAN is approaching almost 60% GICS semiconductors industry within the information technology, and CTEC is pressing about 50%. I'm a big fan of semiconductors in general, and it makes sense, that solar exposure especially, but that is a big component of major indexes as well, and it's something to keep in mind when you're plugging this into other strategies. PBW is much more broad. It's actually its largest sector is industrials. It's by design. It's a much more broader based strategy, more holdings than the other two. And then for that reason, I actually like PBW the most. I think it gets a broader allocation across all of the clean energy components, whereas TAN is exclusively solar and CTEC is technology, and the technology currently tends to lean towards that semiconductor sector. So I like PBW as a broader, by no means diverse. I don't want it to come across that way, but a broader exposure to the clean energy play. So I give the winner to PBW.
Thank you, Mike. I got you down for PBW. Eric, you're up next for exposure strategy. How do you see it?
I would agree with Mike. When I looked at the sectors, I guess I like PBW's diversity here. Sometimes I like when something's all heavy into one thing, but in this case, there's also diversity of what it goes after, right? So do you just think solar is going to be like the future? Or what if like wind or other types of clean energy has like this great run and you might not catch it as much in a TAN? And then the energy sector is pretty big here. So PBW has got, at least in terms of our data here, it's got no more than 22% in any one sector. The other thing is PBW on the flip side is more weighted to the US. And I would actually give that into PBW's favor. I'm just very bullish US. The US leads in a lot of these technological areas, including clean energy. And so the idea that you're going to get more US exposure is good. And the hat trick, it's got more small cap and mid cap exposure, which I personally like in these strategies. To me, this is sort of like a way to do backdoor M&A, because if you are getting some of those smaller names and giving them some decent weightings, those are the companies that are likely to get bought. And that's the only legal way to benefit from M&A pop. Otherwise, you go to jail for having inside information. So I like the fact that they're able to hold some of those companies that might get bought. So I give it to PBW for those reasons. Unless you're you're all into solar, then you can't be TAN here.
Jail talk with Eric Balchunas. Thank you very much, Eric. We got you down for PBW. We next shift to performance. And this is where a lot of investors focus their attention on. So Eric, you're still up. Shake it down for us in terms of performance. Which of these ETFs stands out to you?
So, TAN I think would have to win this category. TAN is like, if this is the shiny object lane and the hot sauce you put in your portfolio, TAN is like, what are those peppers that you can't eat that long before your mouth explodes or whatever? They're hotter than jalapenos, right?
The habaneros.
There you go. That's what TAN is. TAN is it actually fits the ticker and everything. Actually, if you want me to get cheesy, you could get burnt with TAN. It gets that hot. It's usually at the top performing ETF or at the bottom. I've been watching this thing for about 15 years, and it's an exciting ETF. So if you're going after that, you really want to ride the tiger here. I think TAN would probably take the edge. PBW is right up there, though. So given all of the other things that we liked about PBW, the performance is pretty good. It's had some real hot performance as well. CTEC has been more muted performance-wise, at least historically. Again, these things can change pretty quickly. So I guess I would give it to TAN, but PBW is right there.
Very good. Thank you, Eric. How do you see it, Mike, in terms of performance?
Yeah, so CTEC's tough to judge just given the limited track record, the 6 months launching fourth quarter of last year. But in general, I think I would give it to PBW. If you look at 10 years, PBW is actually crushing TAN. They both have a whole lot of pop. I agree with Eric that if you really like to ride the roller coaster, TAN is the way to go. It's kind of like using solar, for power in your house. When it's sunny, it's great. When it's not, it's not great. But I think PBW, not just from a backwards perspective, TAN and PBW are two of the oldest clean energy strategies on the market. So we got a nice long history. To note, they were both well underwater up until the last few years, where they've exploded to the upside. And now they've delivered obviously phenomenal returns. But I'm going to give it to PBW, both on historical performance, but also looking forward. I continue to like that diverse nature, and getting access to multiple clean energy types, like as Eric talked about, wind or solar, or whatever kind of areas of the market it feeds into. So I'm going to go with PBW, but it's a close call between TAN and PBW. But I like that diverse exposure, and I'm sticking with that for my theme.
That takes us to the mystery battle category, where our judges can pick that single factor or multiple factors that give us their analysis. So, Mike, you're still up. Give it to us.
My mystery factor for this thematic lineup is really going to be all about looking under the hood. I'm looking at our classification system right now. We have 16 ETFs classified as clean energy. Year to date, there is a 25% difference in return. They all have clean energy in the name, but a 25% difference in return. If you look out even further, you're going to see massive divergence of returns. So the factor I would really talk about here is understanding what you're buying in these lanes. Clean energy is a very broad concept. And if you're going to invest in the space, you've got to commit the time to know what you want. It's not like buying value and buying a Vanguard value or an S&P value. They both look the same. They both react the same. This space, you can see significant divergence of return. And, we've seen $6 billion flow into this space year to date. It's a $17 billion category, so 33% growth. And I think it's very important to just think about what exactly you're trying to get allocation to. And you got to look under the hood and look at the names. What names are most important to you, best represent the area. So with that in mind, looking under the hood and looking at the names, I'm still going to stick with PBW because I like that diverse construct. When I look at the underlying holdings, I like the weighting methodology. And I think that while I really liked TAN, and I think CTEC's a good product as well, much younger, I'm going to go with PBW. For my mystery category of what's under the hood, I like the companies, the broad exposure to companies I'm getting with that strategy.
That's a strong argument. Thank you, Mike. Eric, we shift to you. What is your mystery battle category and who wins it?
Yeah, I'm going to go with the category that it's risen up in my value of that particular metric, and that's rebalancing frequency. A lot of people don't look at this, but in this case, you've got PBW is quarterly, CTEC is semi-annually, and TAN is annually. And that's a pretty big difference. I like the ones that rebalance more in spaces where things can change quickly. And I would say this would qualify as that. So it's going to rebalance and it's equal weighted. So in this space, you're also going to have these red hot stocks that just surge. So as they surge and they rebalance, they're going to take profits because they're going to have to rebalance to get close to an equal weighting again. So you're constantly harvesting profits as they go up. So for that reason, I would give it to PBW on that rebalancing frequency. And because the ETF is so good at avoiding capital gains distributions, you can do this. So you might as well have a pretty active trading strategy for something like this, and PBW has it.
Very good. Thank you, Eric. Now we shift to the part of the show where our judges get to recap their overall battle winner. So Eric, you're up. PBW, I think I've always had a soft spot for TAN. So if you are into solar, I would definitely just choose TAN. But if you do want the whole clean energy, I think it's heavy on the US. By the way, PBW is the only one that owns Tesla as well. And I think, anything around clean energy, probably Tesla's involved somehow. So I like that. I like that it's heavy US, and I like the equal weighted scheme where weighting methodology where you can get M&A pop. So overall, I think you just got to give it to PBW. Although again, they're all usable. I don't want to say that it's like a runaway, but I think PBW wins it for me. Thank you, Eric. Mike, your final chance to weigh in.
Yeah, so not going to be a whole lot of fireworks here. I also agree that PBW is my winner. The great thing about these ETFs, though, it's not about what's right for me, it's what's right for you. And I think what makes ETFs work so great is that transparency, being able to see how it overlays with your broad core positions and using these strategies for that thematic growth or for that alpha opportunity in your portfolio. So the PBW to me checks the boxes when I think about what I'm looking for from a standpoint of if I want to invest in clean energy, I want to invest in multiple segments. And right now, I actually, another area I would point out is just if you believe in a cyclical story, PBW has a lot more traditional allocations to those cyclical areas. Obviously, that's not been great here the last month or so, but I think it's still got legs to run. And PBW has been around for a long time. Its methodology is sound, and it's my winner for today's battle.
Well, thank you, judges, for your timely analysis. And according to my battle scorecard, we got PBW as the winner, and our judges agreed in most categories. The lone exception would be performance, where Eric favored TAN's hot historical performance. But nevertheless, both of you made some great points. Mike, of course, pointing out with the heavy semiconductor exposure in TAN and CTEC and preferring the more diversified approach of PBW. Eric agreed with that. And also you pointed out, Eric, the U.S. exposure, it's a little bit heavier in PBW. Plus, this is the only ETF, that's PBW, that has the position in Tesla. So overall, great points that each of our judges made, and a great job in breaking this down. Thank you so much, Eric and Mike, for your timely analysis.
You're welcome. It's great being here, Ron.
Likewise.
Keep your ETF battle requests coming. Post your battle requests in our comment section below. Give us your ticker symbols, as well as on our Twitter feed at ETF Guide, hashtag ETF Battles. We also can do ETF to mutual fund matchups, as well as ETF to closed-end fund matchups. Those are a lot of fun. So again, hashtag ETF Battles. Also, you can listen to the program via podcast, where it's available at iTunes, Spotify, Amazon Music, and Google Podcasts. Well, that does it for another episode of ETF Battles. I hope you've enjoyed the show. We'll see you next time. I'm Ron DeLegge with ETF Guide TV. Watch the battle before you invest.